Good evening, everyone, and thank you for joining Lisa D. Smith and Associates Home Ownership Home Buyer Seminar. This evening, I will introduce our team and our guest speakers. On tonight's agenda, we will meet the team. We will discuss credit repair and mortgage lending with our guest speakers. We will go over the home buying process, the HUD program, and the NACA program. At Lisa D. Smith and Associates, we believe your home, your life, your dreams. In our experience, a house is not a dream home because of its size or color. It's about how you feel when you walk through the front door, the way you can instantly see your life unfolding there. This is about more than real estate. It's about your life and your dreams. Our philosophy is simple. Clients come first. We pledge to be in constant communication with our clients, keeping them fully informed throughout the entire buying or selling process. We believe that if you're not left with an amazing experience, we haven't done our job. We don't measure success through achievements or awards, but through the satisfaction of our clients. We have 5 members of our team. Our team lead is real estate agent Lisa D. Smith, real estate agent Tawana Green, real estate agent Courtney Richardson, transaction coordinator Rochelle Graves, and myself, Deandra Sutton, social media and event coordinator. And I will hand it over to Courtney to introduce our guest speakers.
Tawana, I think you're up first.
I'm sorry, Tawana, my apologies.
That's okay. All right, so I have the pleasure of introducing Mr. Whitney Morgan, but right before I do that, I want to let you know of something we're doing really neat. At the end of the presentation, we're going to break out into breakout rooms. This way you can have that one-on-one time with either the credit repair specialist, Mr. Whitney Morgan, or lender, Steve Garrett, or you can talk to one of the agents. You can talk to me, Courtney, or Miss Lisa if you have those questions. So as you're listening to the presentation, keep in mind, think about who you would like to speak to, who you have those extra credits, those questions, those extra questions for, because you will get to have some one-on-one time in a breakout room with them. With that said, I would like to introduce Mr. Whitney Morgan, known as the Kansas City Credit Doctor himself. He's been practicing for a little bit over a year and a half. He's also very passionate about financial literacy. So here to speak to us about credit repair when it comes to purchasing a home and also financial freedom, Mr. Whitney Morgan.
Thank you, Tawana. Could you hear me okay? And could you see me okay?
I could see you and hear you.
Thank you. Thank you all for having me on the call tonight. I'm happy to be here to talk about credit and getting pre-approved for underwriting. So I'm going to go ahead and, Tawana, I believe you want me to share my screen, correct?
Yes, sir.
All right.
Share your slides.
There we go. So can you see that okay?
Yes.
All right. Thank you. So my name is Whitney Morgan. As she stated, I am the Kansas City Credit Doctor, owner of Empowerment Solutions. We are here to empower you and provide solutions to the life's problems that may cause you. In this instance, credit repair and financial literacy. So let's talk about fundability. So everybody on this call you're looking to be funded. You're looking to fundraise. You're a person who would like to purchase a home, and you are approaching a mortgage lender or a lender in general to provide you funding to purchase your home. So that's where credit comes in, because it's not just about the score. We want you to be able to function and structure your credit report for fundability. So how do you do that? Well, there's 10 basic steps in buying a home, and 2 of those steps are some of the most important. So you got to know your credit score, you have to know your credit report, but you also have to get pre-approved. So they say cash is king, but credit is king when it comes to buying a home, correct? Because you cannot get pre-approved without having your credit in order. So this is another area. If you do not know what your credit score is or what's going on with your credit, more than likely the mortgage lender is going to be looking at you side-eyed and is going to tell you that you need to get with someone like myself to get your credit in order, because to get that home that you want, we got to figure out what's going on there. So how do we do that? My job is to remove the bad and add the good. So we're here to build and destroy. It's not just about disputing or removing the negative items off of your report and then you're good to go. No, we need to establish positive credit in your name as well moving forward. So the point system, how it works, you'll be able to accumulate those points moving forward even after you purchase your home. So this is the game that I play. And this is what I'm here to give you tonight is free game. So this is free value for you all moving forward as far as credit. It's a game. You have to know the rules. So what are the rules? Most people think that paying your bills on time is enough. If you pay your bills on time, then you'll be fine. It's a large percentage. It's 35% of your credit scores goes to payment history, but that's not it. You also have to take into account your credit card utilization. So how much do you owe? And that going back to the mortgage process, your income to debt ratio, they're going to analyze that. How much do you owe? What types of credit do you have? Do you have installment loans? Do you have credit cards? I know many people fear credit cards, but you got to have credit cards, installment loans, revolving loans. You have to have a good mix of credit to have a great credit score. Because I want you all to have that 750 plus, that 850 preferably. 15% of the goal of the credit is the length of credit. So if, say, for instance, if you were going to let someone borrow money from you, these are the things that you will look at. You want to see how long have they been borrowing money? What is their track record on paying that money back? How many people have they paid back on time? Things of that nature. So if you think about it in that instance, credit makes a lot more sense. And then also 10% credit mix. Like I said, you want to have different accounts on your credit. So this is something simple and easy that everybody has access to, Credit Karma. Now we know that Credit Karma has Vantage scores, which are not your FICO score. So you don't want to rely on the scores too much, but the content on the website and on the app is useful and actionable to be able to help get your credit in order. So breaking it down, payment history, everything we discussed right there. So you want to have green in every area, ideally, even when looking at your credit report on Credit Karma. So let's go quickly into a rhetorical question. You don't have to answer this right now, but there's a myth out there that if you pay off a collection account, that will help your score. Keep that in mind. So in the first area, payment history, where do you want to be? Obviously, you want to be 100%. You don't want any late payments on your credit report because that late payment could easily drop your score up to 100 points. I have clients that were in the 700s, but they got one late payment on that credit card or what have you, and that dropped them back to the mid 600s. And that's not where you want to be. Obviously, this can be fixed later on, but you don't want to be in this position. Just make sure you pay, especially your credit cards, on time, because they do report on time every month. So if you do not have 100% payment history, here's some things you can do. You can send a goodwill letter to that particular creditor, letting them know. Obviously, a lot of us a lot of us have dealt with loss of jobs. A lot of us are dealing with COVID-19. A lot of us are changing industries right now. Maybe you lost your job. Maybe something happened, a life event. These are the types of things you want to include in the goodwill letter. You're telling the truth that this happened. I wasn't able to make this payment because of this life event happened. Tell that to the creditors. If you have a good relationship with them and a good payment history, more than likely, 9 times or not, they'll remove that payment off your credit report, and then you'll get that positive payment history back. Also, adding accounts. So if you only have 2 or 3 accounts and you have a late payment, obviously that's going to hurt your score a lot more than if you have, say, 20 accounts. and you get one late payment, it's gonna hurt your credit, but not as much as if you have 19 other accounts with positive credit. Pull your credit report to find any inaccuracy. So you may have a late payment that's reporting to one credit bureau and not on the other credit bureau. These are the types of things you want to look for, because that's an inaccuracy, and that's something that we want to dispute. Next area, credit card utilization. So a lot of people think that, or their grandma or somebody like that, they told them that you should pay off your credit cards and then cut it up and then forget about it. I'm telling you, don't do that, because, and here's why, because you spent all this time establishing that positive credit history, that positive payment history on that card. So why would you give it away? You want to make sure that you keep that card and that you use that card, I would say every 3 to 4 months, because the way that lenders work is if you cut that card up or you don't use it for 7, 8 months, they're going to actually close that account, and you're going to lose all that positive history that you've gained on that account. And that's not what you want. So if you do have higher than 0 or 1% credit card utilization, obviously you want to pay down your credit cards. But to counteract that, you can add positive credit accounts, secure credit cards. If you have decent credit, you can add unsecured credit cards. You can add credit accounts that will have high credit limits that will actually balance out and lower your overall utilization. So going back to that fact and the myth that we're discussing, paying off a collection, basically what that does is that updates the last activity on that account. So if you just pay off a collection with no agreement in place with that creditor to remove it off your credit report, all it's going to do is update the last activity for that account, and it's going to update a negative, basically. So you're going to be updating a negative on your credit report after you even if you settled, if you just paid them all this money. And just another fact, collection agencies are buying your debt pennies on a dollar. So they're trying to get whatever they can get from you. So they get you to settle for that account. They're happy. And then this account is still on your credit report. So don't just go in and pay off a collection account. Talk to someone like myself, and we can discuss it and formulate a plan. So next, derogatory remarks. That's where collections, medical bills, charge-offs, repossessions, bankruptcies. This is where these types of things come in. Obviously, you want to have 0. They give you a little leniency with having 1. You're in the yellow area, but these are the things that we generally, most of my customers coming in, that we have to remove. A lot of people have decent accounts. Decent credit. They have decent accounts other than these derogatory remarks. So we have to remove these items. We have to dispute them for unverifiable information and things of that nature to get them to 0. So when they get to underwriting, they have a big smile on their face because they have no negative items on their credit report. How do we do that? Obviously by disputing, ideally certified mail, return receipt. So you want to send that to either the credit bureaus or the creditor specifically, that you're disputing that item. You want to have a certified mail return receipt so that you know exactly when they received that certified mail, and you'll be able to show them, hey, I sent it 30 days ago, 45 days ago, you did not respond. And then you'll be able to use that to your benefit when you dispute it again to get that off your credit report. Credit age. So the ideal mark is right over 7 years. Once again, when you're looking at Credit Karma, you want to look for the green. So you want to have an average of over 7 years of credit age. So this is one of the few areas where student loans help us for my millennials, because a lot of us have student loans that are aged maybe 8, 9, 10 years. So that actually is helping you with your credit age. So that's one area on your credit report where you're getting the most points possible. But if this is an area where you're struggling, one thing you can do is add an authorized user. So whether your mother, your father, your grandmother, whoever, if they have a credit card that is over 5 years old and has perfect payment history, they can add you on that account, and it'll be added to your credit report and have a positive effect on your credit report. It's still not your account. So in underwriting and things of that nature, they're going to look for what accounts that you have, but it'll help temporarily for you so you can get other accounts. Another thing is credit my rent. So this is something we're going to talk about in the breakout room. Obviously, everybody here on this call, if you don't actually own a home yet, you're paying rent. So why not get credit for paying one of your largest expenses every month? Total accounts. Once again, go for green. So most people think it's around 11 accounts, but generally you want to have more than 20 accounts. And this is open and closed. So this is something you want to build up to. Obviously, you don't want to just open 20 random accounts, but as you build your credit report and establish more data for them to analyze, you want to have more than 20 accounts, because once again, if we go back to the analogy of paying someone back, this is more data that they can use to show that you are a good steward of money and finances. So how do we do that? These are accounts that we're going to discuss in the breakout room, but these are different credit builder loans. So there's loans out there and cards, specifically secure credit cards, that are built for people with less than perfect credit to help you get your credit back in order. So these are some of the items that we'll discuss. I have access to a secure credit card that has only 11% APR. So that's amazing for a secure credit card. Most of those are 25% and up, because if you didn't know, now you know. If you have bad credit, you're going to pay more money over your lifetime, because they're going to charge you more interest and things of that nature. So I implore everybody on this call to get your credit together so you can view credit as an asset and not a liability. Yeah, these are other accounts that we can discuss. Did you know that, put a 1 in the chat if you did not know that you can get credit on your credit report for paying your monthly subscriptions. So you can, there's a thing called Grow Credit. You can get credit on your credit report for paying Netflix, for paying Disney, and things that we already do. Like I said, with Credit My Rent, why not get credit on your credit report for things you already do? So once again, Credit My Rent, it's an amazing service. We partner with a lot of realtors with this service to help people get in position to buy a home, because they may not have the capital to buy a new account or something like that. So why not, let's add their rent to their credit report. This will not only increase their payment history, because this is showing the payment history over the last 2 years, but it's also adding to their credit age. So we have a package that discusses 2 years, but we also can go further back than that. So if you've been in a lease for 7 years, that will actually help the average of your credit age. Hard inquiries. So you don't want to look desperate, guys. This is how the lenders look at it. You don't want to have a bunch of hard inquiries on your credit report, because that means you're getting denied over and over. You're getting rejected over and over. So that means that you just look desperate. So you want to apply for different cards or loans or anything like that, or a home loan. You want to apply for these things strategically. Excuse me. So you want to plan ahead when you're going to apply for these different items. You don't want to just apply, oh, I got denied here, let me apply somewhere else. Let me apply somewhere else. Put a 2 in the chat if you've ever been to a car dealership and you went to get funding from them, and they had your credit hit up for 15 different hard inquiries, and you never authorized all these different inquiries. You may have asked them, let's say, hey, let's see what I can get. But then next thing you know, you have 15 new hard inquiries on your credit report, and they're going to sit on there for 2 years. So how do we remove those? You want to call that creditor. So you want to call the banks that the car dealership called to get you approved, and let them know that, hey, I did not authorize this inquiry. Can you remove it off my credit report? If they won't do it, then we utilize what we call our big brother in the financial space, which is the Consumer Financial Protection Bureau. So this is something I believe was passed during the Obama administration to protect consumers like me and you against credit bureaus and creditors and debt collectors, because people don't realize, but these entities are not government entities. They're for-profit entities. So we need organizations like this to help us as consumers to fight against them. So this is definitely what you want to utilize for removing inquiries and really any other facet of disputing these negative items on your credit report. So once again, I want to leave your head spinning even more. So I want to leave you with some more myths that you may have thought that were absolutely true that may not be true. So credit cards are for purchasing items you do not have the money for. That is not true. Having multiple credit cards is a bad thing for your credit score. It's actually the opposite. You should close old accounts to help your credit score. Absolutely not. Negative items have to stay on my credit report for 7 to 10 years. That absolutely not. We can dispute those items and get them off sooner. paying off a collection takes it off your credit report. Not necessarily. You have to have an agreement in place for it to be removed. All three credit bureaus, no, credit reports are the same. Definitely not. And if you pull your free credit report from freeannualreport.com, you will often see different discrepancies between each credit bureau. And these are the things you want to take note of before you get with a professional like myself, or if you want to tackle that challenge yourself. My credit report is accurate. Like, again, once again, not necessarily. You want to double check that and with someone like myself to see what actually is reporting and what isn't reporting on the flip side. So if you enjoyed anything that I discussed today, hopefully you learned something. Put a 3 in the chat if you learned something today. This is my information here. You can text me at 913-485-4174 credit. We can set up a free credit consultation. We can explore what is actually going on in your credit report and come up with a game plan specific to you and what your goals are. You may not even want a house. You may want a car. You may just want to have good credit. You may be starting a business and you want to establish business credit. So yeah, we can come up with a game plan specifically to you to get you to that financial freedom. But I'm done here. Thank you, Twana, for having me, and I'm passing it back to you.
All right. Thank you so much, Whitney. I don't know about y'all, but my head is like, my subscriptions come out of my account faster than my BPU payment do. So if I can get credit for that, that's amazing. So thank you so much. And again, you'll be able to ask Whitney some more questions later in the breakout room. And also, Steve, you can go ahead and start sharing your screen while I'm introducing you, Steve. And also, if you need Whitney's information, you can get in touch with Lisa, Tawana, myself, Rachelle, or DeAndre, and we can absolutely forward that information, his information along to you. And next, we have Mr. Steve Garrett. Mr. Steve Garrett's a good partner of ours, and he is with First Bank. He's a home loan officer, and he's going to be talking to you today about some down payment programs and just about the mortgage process and what is a mortgage, what's it all about? Because I know a lot of us don't even really know what that means. So I yield the floor to you, Mr. Garrett.
Okay, so I'm unmuted now. I'm assuming everyone can hear me.
Can you talk a little bit louder? You're kind of low.
Oh, okay. Is this better?
A little bit.
See if I can turn my mic up. I apologize.
It's okay.
I think you can do that on Zoom. Am I correct? Turn up your mic.
We can hear you good enough.
Okay. All right, great. So I'll go ahead and get started. My name is Steve Garrett. I'm a mortgage loan officer with First Bank. Go ahead and start my slides here. So what I'm going to cover with everyone today is sources for down payment, different types of mortgages that are out there for you to qualify for, how to calculate your debt to income ratio. Before you come to a lender like myself, you should be able to calculate your own debt to income ratio in advance and how much money you're going to need for the home purchasing transaction and when you need to come up with that cash. And also, what is the process and how long does it take from beginning to end to purchase your first home? So find your down payment, traditional sources, of course, savings account, tax refund check. Everyone, I believe, thanks to Biden, is going to get a stimulus refund check. That's also another source. Retirement account, if you have a 401k or IRA, you can take out a loan from a retirement account for your down payment. If you currently own a home and you have equity in the home, you could do a bridge loan to tap into some of the, some of the equity in your current home, and gift funds. If you have a generous relative that wants to give you some or all of your down payment, that's an option as well, as long as we can document it. And then, of course, there are down payment assistance programs out there. Most down payment assistance programs are going to have an income limit on how much income you can make, or it's going to limit where you can buy your property. So keep that in mind when you're working with most down payment assistance programs out there. The Thrive Down Payment Assistance Program, which is offered through my bank, First Bank, gives you $2,000 to help pay some of your closing costs and or down payment. On the Missouri side of the state line, there's MHDC down payment, where Missouri Housing Development Corporation, which actually provides you the entire 3 or 3.5% down payment that you need to purchase your first home. Determine which loan program. So what programs are out there? We have FHA, which is probably one of the most popular programs first-time buyers use. It's definitely not the only option. FHA requires a 3.5% down payment. It's also going to include upfront mortgage insurance and private mortgage insurance, which is included as part of your monthly mortgage payment. If you are military, VA is an option. There is no down payment and there is no private mortgage insurance included on a VA loan for active military or retired military personnel. Thrive, which is a product that's offered through my bank only, which gives you $2,000. The down payment is only 3% on that program. And the good part about it, it does not include mortgage insurance. Anytime you buy a home and you put down less than 20%, you're going to traditionally have mortgage insurance or PMI. That program only requires a 620 credit score. USDA is the other no down payment option. It does include upfront mortgage insurance and monthly. It is restricted by income and also where the property is located. There's not a lot of areas in the KC metro area that qualify for USDA, but where there are some outlining areas on both sides of the state line where you could possibly qualify for a USDA loan with no down payment. And then conventional, which is a minimum of 3%, you are going to have private mortgage insurance included with that payment. So how do we calculate our debt to income ratio? A good DTI or debt to income ratio, you want to shoot for 45%. Some lenders will tell you 41%, 37. Some may even say 50. But the target number you want to shoot for, if possible, is 45%. On a case-by-case basis, you can go higher than 45% debt to income ratio, depending on the loan type, credit score, and other factors on your loan file. Debt to income ratio is as important as your credit score and your job stability, if not more. For instance, if you're working with Whitney Morgan, he gets your credit score up to 800, which is a super high credit score. You're thinking your goal, you could, have an 800 credit score, you can make $100,000 a year, and I still will turn your loan down. Why? Because of your debt to income ratio. You're making $100,000 a year, you have an awesome credit score, but your DTI is 60%. You will not be buying a home with a 60% debt to income ratio. So keep that in mind. Income, credit score is important, but DTI is one of the most important factors. So how can you calculate your own debt to income ratio? It's easy. So we take your hourly rate. An example I'm giving here, you're making $19 an hour, you're working 40 hours a week. So we take $19 times 40 hours. That means you're grossing $760 a week. We take that 760, we multiply it times 52 weeks in a year. That means you're making $39,520 a year. We take that number and we divide it by 12 months, which breaks down to $3,293 a month. And then we take that $3,293, we multiply it times 45%. Remember, I said you want to shoot for 45% debt to income ratio. That tells us that your maximum debt ceiling is $1,481. So that is the most debt, including the mortgage payment on your new home, that we want to see you have. Everyone probably has a car payment, right? Most of us have, unfortunately, student loans. A lot of us have credit cards. So the example I'm giving here, you have a $300 car payment, you have a student loan payment, credit card payment. We take those numbers out of the 1,481 and we're left with 1,000, and this is blocking my screen. Can someone tell me what that, I think it's 1,000, sorry. 1,000 and some change. I can't see the number. I'm sorry, this is blocking it. And that would include your taxes, your insurance, and your PMI. So in this example, if you're making $19 an hour with that debt, with the current debts, that would be your maximum mortgage payment that you could qualify for. How much money are you going to need, and when are you going to need it? Cash up front. So when you're working with Lisa and her team, you guys are going to go out and look at houses. You're going to hopefully find one, put an offer in. When you write that contract, that seller is going to expect an earnest deposit. Average in Kansas City is between $500 and $1,000. Once I get the contract and we actually start the loan process, you're going to have to pay an appraisal fee. The average is between $450 and $500. And then within the first 10 days, you're going to hopefully do a home inspection. The cost of that in Kansas City is going to average $300 to $600. Between $300 and $600. So that's the money you're going to need up front, right? When you write the contract within the first few weeks of you going under contract to purchase your first home. The cash is going to be due at closing, whatever your down payment is. We would have discussed this during the pre-approval process. If you're doing 3%, 3.5%, whatever that percentage is, you're going to have to come up with that money by closing. You're going to have closing costs, which includes your title fees. The average in Kansas City is between $2,800 to $3,500, depending on your purchase price and your loan amount. And in addition to the closing costs, you'll have your escrow deposits and prepaids, which includes 14 months of homeowners insurance. Depending on the month that you buy your home in, and if you're buying in Missouri or Kansas, will determine how much in prepaid taxes we're going to have to pay, but it's going to average 3 to 6 months of prepaid taxes. So once we review all that, we're going to, as your loan officer, we review your income, we verify your assets, your employment. We would have already pulled the credit. We plug everything in. We run it through an automated underwriting system, hopefully for an approval, loan approval, and congrats, you're pre-approved. Once I pull credit on you, that credit report is good for 120 days. I always tell people after I pre-approve you, don't let anyone pull your credit. Make sure you pay all your bills on time. Don't quit your job. Don't take on any more debts and stop using your credit cards. So Lisa, it might take her 30 days to find your home. It may take her 2 months to find your home. You have to be disciplined enough after you get that pre-approval to make sure that nothing changes on your credit report. And that's hard for a lot of people to do. The clock starts ticking. So you're under contract. Lisa's probably going to write it for 30 days. If she doesn't like me, it's going to be 20 days. So 20 to 30 days on the average, hopefully 30 for my sake. You're going to have to give me updated versions of some of this stuff you've already probably given me, updated pay stubs, updated bank statements. After April 15th, we'll need 2020 tax returns. Basic list is 2 weeks pay stubs, 2 years tax returns, 2 years W-2s, 2 bank statements. Remember, everything is 2. And since COVID, all of these documents on pay stubs and bank statements expire every 30 days because of COVID. If you've ever filed bankruptcy, I'll need your bankruptcy discharge papers. If you've ever been divorced, I'll need the divorce decree to make sure you're not paying alimony or child support. And if you are paying child support, we'll need the child support order. So we get the contract, we collect all the documents. You're going to electronically sign the loan application and disclosures so we can submit your loan to underwriting, and we're going to lock your interest rate. And that's the process from beginning to end. That is it for me.
Thank you, Steve. I think we've got one question I saw out there. Most of it we're going to handle in the breakout rooms, but let me look at, someone did ask, how do you make your debt to income ratio go down when it is higher because of student loans?
Oh, that's a good question. It depends on the type of loan. So ironically, right before this Zoom call, Tawana had referred a client to me for pre-approval, and she's on a income-based repayment plan. So if you are on an income-based repayment plan, and pretty much anyone can get on an income-based repayment plan, where you could owe hypothetically $40,000 in student loans, where the normal payment on that might be $700. You can't afford $700. You document that, and that $700 payment shrinks down to a $50 or $75 payment. So the easiest way would be to get on an income-based repayment plan, because we can use that artificially low number for that student loan debt as long as we can document it. So that's the easiest way. Another way would be to I've had people refinance their student loans to lower the payment. And there's a lot of other options, but if the student loan debt is the biggest factor that's killing your debt to income ratio, we have ways to help you get that down. And we can talk about that offline. But good question.
Thank you, Steve. We really appreciate it.
You're welcome.
I'm gonna have you unshare your screen so Deandra can get back up.
Okay, let me see if I can figure out how to, okay, there it is. Stop share. Okay.
All right, we're gonna do a quick intermission.
Okay, what's assets?
Assets are things that bring money into your bank account.
What's liabilities?
Liabilities are things that take money out your bank account.
Entrepreneurship is the act of becoming an entrepreneur. What's entrepreneurship?
Entrepreneurship is a process of setting up a business or businesses.
Taking on a greater than normal
Financial risk.
What's an entrepreneur?
Entrepreneur is a person that organizes and operates a business or businesses.
Also taking on a greater than normal
Financial risk.
What's financial mean?
Money.
And what's risk mean?
Chance.
Come on. What does it mean to own stock?
When you own a share of a company.
Come on. What's real estate investing?
Real estate investing is when you invest in a immovable property.
What's the two types of real estates?
Commercial real estate and residential real estate.
What's commercial real estate?
Commercial real estate is property for businesses and workspace, like an office, store, or land.
And what's residential real estate?
Property to live on, like a house, apartment, or condominium.
Come on. It comes with extra fees when you have real estate, you feel me? Daddy tells you how many times he pays his state property tax a year.
Once a year.
What's the type of maintenance fee?
Cutting grass.
Come on. What's HOA?
Homeowner association.
And what comes along with that?
HOA fee.
Come on. And when it comes to the brokerage percent, what percent is that?
7.
Come on. What's equity?
Equity is the difference between what your business is worth minus what you owe on it.
Also assets minus
liabilities and debt.
Good job. What's credit report?
Credit report is like a report card letting you know how well you did by paying your money back you borrowed.
And how does credit affect your life?
The better you keep your credit, the more opportunities you'll have to get funding.
And what? Large purchases like?
A car or a house.
Come on. And always repay what you
owe.
Because if you owe somebody, that means you're in
debt.
And you never want to be in
debt.
Because that means you
owe somebody.
And we don't never owe
somebody.
Because that ain't what suckers do, period. Come on.
Yeah, man.
I love that video every time I see it. All right, so I'm Lisa Smith, and I want to thank everybody that's joined today. I want to thank our 2 presenters that have gone forward already. And even doing this, I've learned so much tonight. So we will make sure we get all this information to you all after the presentation. I just want to talk about and tell a little bit about our team. And we're also going to talk about now the home buying process once you get on the other side of the credit repair and the pre-approval. Okay. So first of all, as far as our team is, let's talk about our services. It's all about you. Don't we love that? When it's all about us. We strive to provide the best possible customer service for you all. And that just means everybody comes to us with different situations. I have some that need to sell a house to buy. We have some that are moving from out of state. Whatever the situation, we're going to set up your specific transaction to work for you. The next thing is constant communication, being available to answer any and all questions that you may have during the process. That is so important. There's a lot of things that are going to happen throughout this process, and we want to make sure you understand all of it as you go through it. We should be contacting you before you're having to reach out to us with questions, okay? The next part is to guide you through the process. The reason we're a real estate professional is because we do this every day. We understand this. We know what happens. What's the next step? Our job is to make sure you know what the next step is and that we guide you on how that happens. Whenever we end one thing with you all, there will always be a phone call or an email that says, okay, this is what we're going to do next. All right. The next part is negotiating terms. And it says, we will provide you with the most up-to-date market information and negotiate on your behalf. As you all know, right now, we've got a lot of buyers in the market. And with that, you've got to go in it with the most up-to-date information. You've got to have agents that have taken the time to understand the neighborhood, looked at the comparables. That means houses that have sold recently in the neighborhood. And we know what to do to put together a strong offer to help you win that offer. Okay. All right, so let's look at this home buying process. The first step in it is to select a real estate agent. And I will hope with you all being here tonight that you're choosing to select an agent with Lisa D. Smith and Associates. We've got 3 great agents on this team and 2 other awesome support to us that help us to provide you with great customer service. So that's the first step. The next step we've talked about is obtaining pre-approval for your home loan. We've had Whitney come on and talk about repairing credit, if that's something you need to do. We've had Steve come on and talk about getting approved so that you can get that pre-approval. So that's very important as well. The next step is going to be is that you meet and have a one-on-one with one of the agents, and we call that a buyer consultation. This is where we sit down and talk about what are your future goals and dreams in your home? How many bedrooms? How many bathrooms? What area do you want to live in? Where do you see yourself in 5 to 7 years? These questions are important because they affect the type of home you're looking to buy. We'll talk about all those different things and then set you up on what we call a search. It'll be a search that's straight from the MLS. What is MLS? That's the multiple listing service. That's where all the listings, all the homes, land, residential, commercial, all the homes go into that system, and we'll pull directly from that system homes for you to look at. They'll come directly to your email so you can wake up and look at them and scroll through them. Now, also what we'll do is provide you with our Keller Williams app. And the reason I love the app is because it's linked directly to the MLS too. And you can search and look at all of that. And the only person who'll reach out to you will be one of us agents. You guys know if you go to Realtor, Trulia, Zillow, any of those, the minute you click on something, you've probably got about 5 or 6 agents reaching out to you. When we send you the app, you can search straight to the MLS and you don't have to worry about anyone reaching out every time. We'll just check on you every now and then and see if there's something you want to go view. Okay. So once you've started to look at some homes and learn what you like, then we're going to go out and we're going to start viewing those. And during that process, what's going to happen is you're going to really at that point learn what you want in a home. And we're also as the agents learning you, finding out what you like. I love going out with husbands and wives because they always want something different. And it's just funny for me to watch. I also love when I go out and I have clients to tell me, whatever I get, I do not want a split home, or I don't want this. And then the house that they always say they don't want is the one that they end up picking out. So these are the things that we're going to be learning. You're going to be learning about homes, and we're going to be learning on how to help you find the right home. So once we find that home, then we're going to write an offer. We're going to sit down and talk about what's going on in the market right now, what's going on in the sales in that neighborhood, and we're going to help you put together a strong offer. And that's what we're going to submit. The next, if you see the next point in that says negotiate terms, I will tell you in the market we've been in right now, we don't get a lot of opportunity to negotiate terms. It's a one and done. We've got to put your strongest offer on the table first. Okay. And we're going to help you. We're spending time with talking amongst ourselves and talking with others to put where we've got ways where we're going to ask you, okay, let's try this, let's list this, let's do this, so that we are putting together a strong offer the first time. And I will tell you this, let me say this. I always believe that you get the house that you're supposed to have. I say this almost every couple of days to someone. And it may not be that we get the first house, okay? And sometimes we may not get the second house. But let me tell you this, the house that you'll get is the one that was specifically designed for you. I have clients that I've been searching with for about a month and a half now. We wrote 2 offers. Well, let me say this. They were told that the school district that they were in was allowing, because of COVID-19, people to go outside of the boundaries. That's what they had been told. So we have been looking for schools outside of looking for homes outside of the boundaries. The 2 offers we wrote on were on homes outside of their normal school boundary. And we didn't get those offers. We did not get those homes. And I told them, just as I'm telling you now, we'll always get the right one. Well, let me tell you, they later found out that they had to be within school boundary. That was not, the school district could come back and change rules. And so the house that we did actually find for them and write for them, put them exactly where their kids needed to be. Okay, so don't fret. Don't get worried. The right one will come along. I promise you. So once we get an accepted contract, as Steve has already mentioned, there are 3 places up front that you're going to pay money before we even get to the closing table. And that first one is going to be earnest money. And that's going to be due right after we have an accepted contract. Normally, we have been looking at either $500 or $1,000 on earnest money. But I'm going to tell you that with some of the ways we're having to change things to get offers, you may be prepared. You want to be prepared to put down a little more than $1,000. Some of the houses are even asking for 1% of the purchase price. But do know earnest money is not lost money. It gets subtracted from your down payment at the closing table. Okay, Tawana's going to take us to the next part of the home buying process.
All right, thank you, Miss Lisa. Okay, can you hear me good? All right, so you're under contract. What's next? Your offer's been accepted. Your next step is going to be the inspection. You want to get a good inspection on your home by a certified inspector. Why? You want that inspector to come in. You want him to look at, he or she, to look at your roof, your foundation, your electrical, your plumbing. You want to make sure all that is good and ready for you to move in on move-in day. This is one of the fees that you will pay up front. Okay, so Ms. Lisa talked about that earnest money. The second fee you're going to pay up front is your inspection, for your inspection cost. The third fee that you're going to pay is going to be your appraisal. So after your inspection passes, you'll know it's all good. You're going to then have to pay upfront to get that appraisal on your home that Steve Garrett talked about. Your second step in the process is going to be to conduct a title search. This is very, very important. And the reason why is we want to make sure you have a free and clear title. So therefore, they can transfer your name to that title of your new home. We want to make sure there's no liens or anything crazy or negative on your title. So the title company that you hire will, that you work with, will conduct a title search just to make sure it's a free and clear title. The next step in the process is going to be to obtain mortgage financing and get that clear close from your lender. So when you get that clear close from your lender, he or she's going to issue those final documents. They're going to probably ask you some more questions. You're going to probably have to submit something you've already submitted 2 or 3 times, but just know your lender's working hard to get you to obtain your final financing and also get you that clear close. The next step, final walkthrough. Your agent's going to do this with you. We're going to walk through your house. We're going to make sure, we're going to look for those little nuances, chip paint, things like that we need to get fixed before your move-in day. It's called the final walkthrough. We will walk through this with you hand in hand. After the final walkthrough, it's closing day. You hear a lot of people say the closing table. I'm headed to the closing table. When you get to closing day, you will go into your title company. You'll sit at the table. There's going to be a thick packet of documents for you to sign. They'll give you a good pen, even maybe they give you some treats. But it's closing day. 2 important things to remember about closing day. Bring your ID a valid ID, and also bring your certified funds. Your lender will let you know how much you need, what those final certified funds are that you need to bring to closing day. And then after that, what do? You move into your house. It's moving day. You're going to know what day this is so you can schedule that moving truck far enough in advance so you are successful and have a smooth transition on your move-in day. Move into your new home. And that's the end of the process. Celebration day.
Okay, we've received a lot of information today, so I'm going to keep this really short. So I'm just going to talk about 2 home buying programs that you may be able to benefit from. The first one is called from the Department of Housing and Urban Development, also known as HUD, the Good Neighbors Next Door program. What is the Good Neighbors Next Door program? It is a program where HUD offers a discount of up to 50% off the list price of the home. And in return, the eligible buyer then has to stay in the house for for 3 years, okay? And through the program, that 50% that they are giving you the discount, that actually gets rolled into a second mortgage, but that mortgage does not get any interest, or there's no payments that you have to pay on that. It's just kind of sitting off to the side for that 3-year period. And then after that 3-year period, if you meet all of the conditions, which we can discuss at a later time if you're interested in the program, then that 50%, that second mortgage, it drops off. Okay, we go to the next slide. So who is eligible for the Good Neighbors Next Door program? Law enforcement officers, teachers who are teaching pre-K through 12th grade, firefighters, and emergency medical technicians. So the reason why these people are targeted is because that through this program, HUD is trying to bring back some areas that may not be like the most desirable neighborhoods, but they're trying to revitalize these areas. And the thought is, or the goal of the program is to put people who are already working in the community actually living in that community as homeowners. Okay, next page. So eligible, so the catch to this program is that you can only purchase a home that has been already approved through the Good Neighbors Next Door program. And it's a big, like it has to be approved because it's these revitalization areas are assigned as such through Congress, through the National Housing Act. So they are specific neighborhoods. So they have to be in this program. So they have to be available, and there's not always a lot available. So that's kind of like the catch to this program. So that's just the Good Neighbors Next Door program really quickly. And if we want to also talk about the Teachers Next Door program, they sound like the same thing, the Teachers Next Door and the Good Neighbors Next Door, but they're 2 totally different programs. The Teachers Next Door program is actually a grant, okay? And this can be used on any home that's listed, not just HUD, Good Neighbor Next Door homes, any homes. So this is a grant, and you know grants, that's free money that you do not have to pay back. And these monies can be used towards your closing costs or down payment assistance, and they will offer up to $10,681. I know that's like a super specific amount, but that's the amount, and you do not have to pay it back. And in order to qualify for this, do you have to be a teacher because it's called the Teachers Next Door program? You would think so, right? But actually not. You could be a police officer, firefighter, nurse, medical professional, government worker, or others. There's even some sub programs within the Teachers Next Door for like military people as well. So if these are some programs that you may be interested in, then please let Lisa, Tawana, or myself know. We would love to give you more information about it. I know I went through that really, really quickly, but we'll have some more time to chat about it I'm trying to honor everybody's time. We can talk about it later in our breakouts or maybe later in the buyer consultation. And I am Courtney Richardson. I did not introduce myself. I am Courtney Richardson. That's it. Any questions?
Okay, like Courtney, I'm going to just hit the highlights of NACA. This is something that we can provide more information. I get a lot of questions about it, so we chose to add it to the home buying seminar as well today. Okay, Deandra, we can go to the next slide. Okay, so what exactly is NACA? It's the Neighborhood Assistance Corporation of America. It's a nonprofit community advocacy and home ownership organization. Their goal is to build strong, healthy neighborhoods in urban and rural areas nationwide through affordable home ownership. Okay, if you want to keep going. So what are the benefits of doing NACA? No down payment, no closing cost, no PMI, points or fees, below market fixed rate. You can buy down your interest rate. The max on it for a single family is $484,350, and the max for a multifamily home is $726,525. First step. Right now, they've set up the home buying workshops virtual. You do have to attend a virtual home buying workshop. So the first step to purchasing a home through NACA, through the NACA Home program, is to attend the free NACA Home Buyer Workshop. The availability of these workshops are few and far between. And I will tell you, they have done a good job, though, of setting it up online. So we will provide the information for the website to go online and set up if you want to go on and attend that home buyers workshop. Also, they have also done a good job of setting up online where you can get into chats to ask questions. I will tell you, please don't try to get through phone. That is harder to do. It's easier to get into a chat. Okay, next slide. All right, after attending the workshop, the next thing will be is they will set up a web file for you where you will turn around and upload all your documents. Many of the same documents that Steve Garrett talked about. I will tell you, hold on to those documents. I've done this with enough people. Keep them in a folder. Everything they ask you for, put it in a folder because you will more than likely have to submit it again. Okay, next slide. All right. During this period of time when you will meet with the NACA counselor, okay? And I've put, this is where your patience and keeping your eye on the big picture will truly matter. This is not a fast process. I've known people to get through the NACA process in 3 months, some 4 months. I think the average is 6 months. And I've known some for it to take up to a year. So this is something that you want to allow time to do. Okay, you are going to meet with the counselor and they are certain goals you're going to have to meet before you can go to the next step in the process. I'm going to actually read this next portion of the slide. NACA is so thorough. In order to reach NACA loan qualification status, they will ask a lot of you. These things include maintaining a certain level of funds and savings, as well as maintaining a payment shock. This allows you to save not what your rent currently is, but instead what your mortgage will be. NACA's goal is not for you to be house poor, but rather prepared and comfortable regarding making a future mortgage payment. Okay, next. Step 4, this is when you get that pre-qualification letter, and now it's time to go out and start looking for a home. They invite you, you and your agent, when you get your qualification letter. I will tell you, agents that are working with the NACA program, we have been NACA approved, meaning we've gone through training. There are a few things that we do in the home buying process that are a little different, and that's why it's important to go through that training. NACA has their own inspectors that go out and inspect the homes, as well as determining what should be fixed in the homes. And so that's kind of a part of what happens after the qualification process. Okay, next slide. So basically, once we get past the qualifications, find the home, pass the inspection, get the inspection items fixed, then you will continue to work with your loan officer to then get to the point where you get that clear to close. Any questions that are out there right now? Let me look. Any in the chat? Okay. All right. Race Courtney. So once you leave, you can go back into whichever one you like. Okay. If you have any problems though, put it in the chat and we're here to help. All right. All the rooms are open.